All right, traders, if you followed my video analysis that I posted in last night's video, you should have had a phenomenal green day in terms of put options and shorting the market. I told you one of the key levels of interest based off the pattern that I was seeing was to go with the pre-market highs. If the SPY has a nice drop towards pre-market highs at one of our key levels, you're going to want to short the retest. That ended up being the exact high of day. In terms of where my profits came from on the day, I ended up making over $6,000 in profits, buying the dip towards the exact lows back-to-back on call options, literally slightly above my best level for calls, which was $448.90. I updated my chat and I told him 449.20 was going to be our overall best level, and if it drops, we're going to be adding literally towards the exact low of days. We hit calls perfectly. Trader Society had a phenomenal green day today. If you look at the polls here, we absolutely crushed it. We only had one member on the team go red. Everyone else went green. Within this video, towards the end, I'm going to be sharing with you the overall market commentary that I gave within Trader Society, along with the trades that I ended up making. And we're going to start this video off with the new upcoming trading plan. I am seeing strong confirmations and reasons on why this trading plan is going to work out. So I'm going to prepare you to trade the best setups, the best prices. We're going to be going over the new key levels to buy the dip and buy call options as the market's going up. We're going to be making money, and we're going to be going over the new key levels where to short the market and buy put options as the market's going down. So I'm going to be giving you the new upcoming trading plan, and then I'm going to be recapping the market analysis that I gave out along with the trade recaps on how we were able to have such an amazing green day. Let's get straight into it. So based off of this daily chart pattern that we're looking at right here, if you just look at it visually, what I've done is I went back throughout the past history and I came up with a very specific plan, and one of the correlations to this plan is how history repeats itself when SPY forms these daily candlesticks at key resistance. So based off of what I'm seeing, I'm going to be focused on buying the dip on oversold levels for calls that have not been tested yet. That is my interest for tomorrow. And if the levels don't hit, then I really won't be too interested in buying call options. So what are my levels to consider buying call options at? So I have three levels. The first one is going to be right here. We have still not hit 448.74. Now we did nearly bottom today, slightly above this level, and the bounce did work. So due to that reason, this is going to be considered my worst level for calls heading into tomorrow. And if I do decide to buy the dip here where the bear trap was created and it hasn't been retested, so it's going to try to bounce first, then I will use a very, very tight stop loss at this 448.80 level. Now, what is my second level for calls? My second level for calls is 447. This was previous resistance on the SPY that has not been retested. You can see when SPY broke above this resistance, it had a very nice breakout and it never retested. So when we go back to 447, we should see, the exact level is 446.80. We should see some sort of bounce even if it were to push lower. So that would be my second level for calls. Now, my true best level for calls, once this hits, I genuinely believe this is going to play out perfectly. So my true best level is $444 to $443.50. As you can see, the ultimate bear trap was created when the SPY broke above this resistance, which was at $443.30. Now, if you go back to the pre-market, which is something that most people don't do and they will forget on because these levels take time to hit, so they're going to forget. They're not going to set their price alerts. They're not going to be prepared in advance to remember the levels. But if you look right here, the true bear trap was triggered right here, which was 443.74. When the SPY broke above this and it never went back down, it just kept on rising up and it went up 10 points within a couple of days. That's the ultimate level, man. So my true best zone for calls would be 443.90 to right here, 443.50. These two pre-market resistance levels, when the SPY broke above it, it never retested and it kept on breaking out. One of the strategies we like to use within the market, instead of buying the breakout, hoping that it's not going to be a fake out, we prefer for it to break above resistance. The bigger the run, the better. The longer it lasts, the better. And if it drops just as fast as it went up, then we're going to look to buy the dip at that previous breakout level, because that previous resistance will likely react as a new support level, because that is where the bears got destroyed, and people are going to forget that they got destroyed there, and people aren't going to pay attention to these levels, and people don't understand that previous resistance tends to react to support. When a major bear trap is created, when SPY has a major break above resistance, it keeps on running, it's going up fast, it's a multi-day runner. If it's going to drop right back down to that previous resistance level, odds are that's where it's going to bounce, because the SPY had such a massive breakout. So it would make sense for the bears to get out there, and it would make sense for a squeeze to get created as well, in a sense, to turn previous resistance into support, which is why 443.80 to 443.50 is our true best level for calls, right? So that is what I'll be waiting for, and that is what I'm interested in doing. I do not care about missing out or trading at other specific levels. With that being said, what is the game plan for put options? The game plan for the put options is fairly the same. We are looking for overextended levels. So our best zone to buy puts on the SPY is going to remain the same. It is going to be 443.70 to 454. That is your best level for puts. That is strong resistance on the SPY. And also 454 never tested. And if you've been watching our videos, one of the strategies that we've been using to consistently profit within the market is going with key support levels that cracked, that created bull traps that were never tested. So for example, if we look at 454, you can visually see right here, there was a lot of support on the SPY. Let me go back to this right here. There was a lot of support in the pre-market towards 454. When it cracked this support, it never really retested. It sold off very, very hard. So when we spike back to 453.70 to 454, we should see another nice drop for put options. That is going to be our best level. Now, another level of interest is a top wick that has not been retested on the SPY. You can see right here, we have a lot of strong resistance at 453. In a sense, it has not been retested. We will be keeping an eye on it. That's our second best level. Now, in terms of our lower level of interest, which could be considered our worst. And again, just keep in mind, these worst levels could be the best levels for tomorrow. It's possible. I'm just giving you overall perspective on the chart and overall perspective on the week in terms of where the best trades can play out. But if you see a strong confirmation or pattern to get in, then yeah, you can trade the lower levels as well. Just understand they're not truly the best based off of the chart and technicals. But we have a gap. We have a gap to fill at 451.19. There is a gap to fill. When SPY closes the gap, it is going to try to pull back. But if it does break out and react to support, we're going to go to 453 to 454. So if you are in fucking puts, you better stop out super quick and understand that it's going to be the worst level in that situation if we break above previous closing price and react to support. What I dislike about the 451.19 level is I'm seeing confirmations where we can push higher. I also understand it's not truly the best level, even though it can be, but it's already played out in a sense. That's truly what I dislike about it. I told you guys to go with the pre-market highs. The pre-market highs were the exact high of day at 451. It retested in the pre-market, it sold off, and then it retested again and it sold off. So it already played out several times. So there isn't much special about buying puts at 451 when it already played out. It's not truly special. It was special in that video that I posted yesterday saying if you want to go at pre-market highs, if the SPY has a nice drop in the pre-market based off the patterns and confirmations that I'm seeing, you're going to want to short the highs. And if you would have did that, you would have been at the exact top. And if you look right here, based off of everything that I teach, when the 30-minute candlestick closed, when the candlesticks closed red on that key level, it dropped. So that was another great confirmation to be buying puts, right? So that's where I stand on the market. Now, what I'm going to do very, very quickly is give you a quick price ladder. So I want you to understand the price ladder that I'm going to give you. We are not interested in trading at every single level in this price ladder. Not every single level and not every single bracket is created equally within this price ladder. If one level reacts as a support level, as a floor, as a bullish confirmation within 30-minute chart or whatever it is that you use, it's supposed to spike up to the next level within some time. If one level reacts as a resistance level, reacts as a ceiling, then it's supposed to drop back down to the next level. We sell into the move. We do not hope for multiple levels to hit. We trade one level at a time, right? Not all levels are created equally, and not all levels are the key levels and the best setups, the best prices to be trading at. What I went over are the best setups at the best prices to be trading at. So let's get into the price ladder real quick. This is going to help you out for tomorrow. So 454, best level for puts possible. 454, 453.70. Under that, we go to right around here, which is going to be the gap. There is a gap to fill at 451.20. Right now, it's a lot of resistance, but it's not the best level because it's already been playing out, but it's still a gap. So if 451.20 reacts as a support, We spike to 453, 454. That's where you hit puts. If it reacts as a resistance, then we drop to right here. This is where we're going to drop. We're going to drop to 448.80. Now, in terms of 448.80, this is supposed to bounce and react to support. It has not been retested yet. What I dislike about it is it bottoms slightly higher at 449.20, so it already worked in a sense. But we are supposed to bounce at this level, but it's still considered the worst level for calls since it already played out in a sense, but that is make or break support. If we go under 448.90, what's the next level? The next level is 447. That has not been tested. That's where we want to buy calls. If we go under that, we see a massive drop, 444, 443.50, best level for calls. That is the game plan for tomorrow. That is the price ladder. If it reacts against you, you need to stop out quickly and understand you're not going to risk holding through the next drop in the ladder, right? And then your price target, you sell into the move. You don't hold all the way until the profit target. That is the overall plan. We will absolutely crush it tomorrow. I'm seeing a phenomenal trading day where my focus personally is going to be buying put options at the overbought levels with bearish confirmations and buying call options at oversold levels that have not been tested yet. The plan that I gave out yesterday worked absolutely phenomenal, and it is not by accident that the entire team today within Trader Society went green, except for literally one person. Now, what I'm going to do is I'm going to break down the key levels. So this within Trader Society, I provide my key levels, and that is my trading plan. And then I give very important updates in the pre-market and during market hours in terms of my trading plans, my trade ideas. And then in terms of real-time alerts, this is where I alert whether I'm in calls, in puts, entry, and exit. That's all alerted right here. So in terms of recapping the trades and educational purposes, I'm going to quickly go over this now that I disclosed our trading plan for tomorrow so you can make money. So let's get straight into this. So in terms of the overall plan, if you watch the video, we all discussed. So this right here, this was key. This was one of the key levels that I said right here. So listen to this. If we drop $1 from the pre-market highs, you're going to want to be look into buying put options at the pre-market highs. So as you can see in the pre-market, we dropped $1 plus within the pre-market. This went from 451 all the way down to 449. What did my plan say? To buy puts at the pre-market highs, which was literally the high of day. So my question to you is, did you take advantage of that? Did you take advantage of that money-making opportunity if you were in Trader Society? That was one play that unfolded very, very nicely. Now, in terms of, and that was all based off of confirmations that I was seeing in yesterday's video. So keep in mind, that's not a strategy that I do every single time. I use that with the daily chart and other patterns and other strategies that I'm seeing. So understand, I'm not telling you to just short the pre-market highs every single fucking time. That's not what I'm telling you to do. It's deeper than that, so understand that. But in terms of other levels, we were interested in buying calls at 448.90. And then I updated the team. We changed the level to 449.20. And that's where I truly shined, and that's where I absolutely banked. So let's get into the real-time trades. So this was the main trade. This is where I made the vast majority of the profit at 10:33 a.m. At 10:33 a.m., I was in at 449 calls. The reason why I bought call options at 10:33 a.m., which was literally right here, I'm going to draw an oval at the time that I sent out that alert. This was the one where I made the vast majority of the profit on the day. The one before that, it was just a quicker scalp where I made a smaller profit. But this was the big trade. Right here, I bought call options. Why did I decide to buy call options right here at 10:33 a.m.? I used my key level along with the 30-minute chart. So first things first, what was the key level? The key level was very, very simple. If you watched my video yesterday, I told you there is a level for calls that has not been tested. And that level was right here at $448.80. That was a key level for me to be buying calls. Now, if you watched my video yesterday, I also explained to you how there is a lot of heavy support on the SPY right here at 449.70. So it could bounce there as well, but it's not the best level. Now, if you looked in the pre-market, I looked at the pre-market and I said, okay, there's a shit ton of support at 449.11, and there's a gap that still has not been filled yet. So it's going to try to bottom at the support and fill the gap, which is nearly at our key level. So I don't nickel and dime things. That's how I came up with that level in a sense when I was buying those calls when SPY was at 449.40 instead of 448.80, which was considered the best level. So again, things change and you must adapt. You must use extended hours. You must use confirmations. But this was the true confirmation on why I decided to buy those calls. And this is where it's going to make a lot of sense for you right here. So let me know if you visually saw this pattern. What you need to understand is if I see a 30-minute confirmation on the chart that is close to one of my key levels, I will take the trade. It does not have to be exactly at my key level. It could be below or above. It does not have to be at my key level. If I see a reason to get in based off the 30-minute chart, it can be above my key level, a worser entry, or it can be under my key level, a better entry, right? So I want you to understand that because this had a lot of influence along with the pre-market lows that had a lot of strong influence as well. But this is what I want to bring awareness to. Look at the 30-minute chart, my friends. Look at this green candlestick right here. Do you see how this candlestick is towards that same overall support level? And do you see how there's this like green wick that's waiting to fill? This is like a little trend reversal candlestick. When you see a trend reversal green candlestick like this at a key support level that we spoke about that has not been tested in a sense, especially at pre-market lows, what the market's going to do is it is going to try when it closes like this. So when the 30-minute candle closes like this at the key support level that we went over, I showed you how to identify. It is going to try to spike. It is going to try to spike to the high of this level and break above it. That's what the market is going to try to do. So using that 30-minute pattern that I literally talk about in my videos, go back and watch my videos. We talk about this several times. I love that pattern where the SPY forms this 30-minute wick, and then when the next 30-minute candle opens, it tries to spike back to the high of this wick. So if you can get in below that high of the wick on the next opening of the 30-minute candle, when it's confirmed that it's going to try to retest, you can absolutely bank, right? So I looked at that and I compared it, right? So this is what I noticed. I noticed that this 30-minute candlestick right here, so look at this candlestick right here. We're comparing this level right here to a similar level, right? We're comparing this, and this is what I noticed. It's nearly the same thing. Do you see that? Do you see how these are nearly the same thing? So based off that pattern, what was the best level to buy call options on the opening of that 30-minute candle with the confirmation? It was towards the low of this 30-minute candlestick. Do you see how it bottomed towards the low of this? So when SPY was going to the low of this, right? When it was going to the low of this, I told myself, I'm not going to nickel and dime this and try to get in at 448.80. If we drop to 448.80, I will add, right? And if you don't want to add, then you should just take a starter position and then consider adding if it drops, or just take a smaller position if you don't want to add, right? But that's what I would do. So when this was dropping to the low of this 30-minute candlestick, that's when I was alerting call options. You see how strategic that was? And that took 1 hour to occur. That took over an hour to occur, actually. So for that pattern to form and for that level of interest to hit, it took over an hour, which is why I don't trade. I don't like trading at the market open because that opportunity wasn't there at the market open. It wasn't there. I had to wait. I had to wait for things to develop. And I also don't consider myself to be a morning person. I'm not a morning person. I don't trade best in the morning. I don't like waking up super fucking early. And with my strategies, I like to wait for 30-minute candles to develop. And in order to wait for 30-minute candlesticks to develop, you need to typically wait at least 1 hour. You need to wait until about at least 10:30 a.m. Wait for something to develop, right? So that's how I nail calls. And that's how you should have nailed calls if you watched this channel. You should have been all over that based off of everything I taught you. And that is what led to my success today. And we sold into the spike. That was the trade. There was no other great ideas, in terms of the pre-market highs, but there was no other confirmations. There was no other confirmations. There was no other trades to be making based off of everything that I teach. The only trades to be made was shorting the pre-market highs, which I said in my video yesterday, and buying the dip towards the lows, which I said in my video yesterday. There is no excuse to be read if you apply what I'm teaching you within these videos. With that being said, that's one of my trading strategies that I like to use personally, and that's how I was able to have an amazing green day, and that's how the team was able to have an amazing green day, within the team. I said it right here, 10:31 a.m. This was my analysis. Did you catch this? Because this that I'm showing you comes from my fucking videos. It comes from the videos that I teach, the stuff that I put out, the stuff that I give away. Right here at 10:31 a.m. Did your mind tell you this at 10:31 a.m.? SPY should spike the next 30 minutes, but I want to buy calls towards a dip. My levels are 449.90. That was a typo. It was 449.20. It wasn't 90. It was 20. And 448.80 to add, right? So if it drops 30 cents, I add. This will be a bullish 30-minute candlestick. Avoid puts, which it was. It was a super bullish candlestick. I alerted the calls at the lows because I used the history of how this 30-minute pattern repeats itself. And that's what you must do. You must align yourself with history repeating itself, with patterns repeat itself, with the key levels that I teach. There is no reason to be read if you've been following what I taught in today's video. Everyone should have had a phenomenal green day. There's people complaining that, oh man, what a terrible day. SPY was only trading in like a 1 point range. As a scalper, I'm looking to scalp 30 to 50 cents. I can bank off a 1 point range as long as I'm in at the exact bottom, which I was, and the exact top, which my plan gave you for pre-market highs. So it does not matter if it's a small range day. I don't hold my hopes. I scalp quickly. I'm going to leave it off at that. So here's the deal, man. If you want to be a part of Traders Society, it is the first link down below in the description. Everything is explained in terms of what's included. It is a one-time fee, and you get instant lifetime access you can start trading with tomorrow. You will be surrounded by a couple multi-millionaires who are moderators within the chat who can help assist you through direct messages as well. You'll be surrounded by the best team you could be surrounded by, the SPY money-making floor. We are all alerting our trades and analysis and trading plans and what we're seeing, right? We trade what we see, not what we think, within the SPY trading floor. It is organized. I share with you all of my market analysis, all my trading plans, all my real-time trades. I give it all to you. I would strongly recommend you get in this program if you are serious about making money within the overall market, and if you are serious in learning how to master price action. Because at the end of the day, that is what I'm here to do. I am here to help you trade what you see, not what you think. And I am here in terms of a transformation that I can make for you is to show you how to master and trade price action. If you want to learn how to master price action, you want to learn how to master the patterns, this is going to be the right program for you. So I'm going to leave it off at that. It's the first link down below in the description. You will get access to all my real-time trades, all my real-time analysis, all of the educational content, the video lesson library, all of the moderators, everything. It is all within that program. It's the first link down below. I will see you guys tomorrow, live towards market open.